Very good morning to madam. Today our group will be present you madam for our assignment 2 for principle of finance subject. So this is our group members, Elaris, Fatia Alia, me, Jessica, and Liana. So for the first slide, I will be the one that presents. Why we choose this company? We choose Panasonic and Kin company because these two company is successful in electronic as well as its non-electronic products. So for Panasonic Corporation sells virtually all of its products and services worldwide under the Panasonic brand. The company has sold products under a number of other brand names during its history. Panasonic is currently marketing and selling its products successfully across the world and is constantly expanding and diversifying its business. And for the Kin, the company grew thanks to his clear vision, and by the late 1970s, it had expanded to encompass the production of electronic accessory and lighting. King forayed into the export market and grew in the next decade. So we think that these two, Kin and Panasonic, is really interesting company for us to do the assignment to. So that's why we choose these two company. So thank you, madam. That's all from me, and I will pass for the next presenter.
Thank you so much, Jessica. Sorry, hi. I will explain the SWOT analysis and some of the financial ration. So SWOT analysis is a tool that used to identify the organization's strengths, weakness, opportunity, and threat. And then the primary objective of SWOT analysis is to help organization develop a full awareness of all the factors involved in making a business decision. So for SWOT analysis for Kind Holding Berhad, their strength is to create employment opportunities and high margins and talent management. Their weakness is rising of production costs, and their opportunities is local collaboration and customer preference are fast changing. And their threat is shortage of skilled human resource and competitive pressure. So proceed with Panasonic. Their strength is performance consistency, wide presence, strong marketing communication, product quality and brand trust, and then sponsorship. And then their weakness to focus become an issue. The constant presence of competitive, replica, low revenue. Their opportunities, which is new technology, opening out for new marketing, body better customer service, and their trade is intense competition and black market and regulatory pressure. And then we proceed with current ratio. Current ratio indicates a company's degree of liquidity by dividing the company's current asset by its current liabilities. And then this ratio is used to measure the ability of a company to pay short-term obligation. So the current ratio of Kind Holding Berhad in 2019 was 2.25 and decreased to 2.07 in 2020. Meanwhile, for Panasonic, its current ratio in 2019 was 4.52 and increased to 2.55 in 2020. So next to quick ratio. Quick ratio is another indicator of company's short-term liquidity position and measure a company's ability to meet short-term obligation with its most liquid assets. It is a measure of liquidity calculated by defining the company's current assets less inventory by its current liabilities. So the quick ratio for Kind Holding Berhad was decreasing in 2020, which is 1.46 from 1.56 in 2019. Meanwhile, for quick ratio for Panasonic also decreased about 0.14 from 4.23 in 2019 and 4.09 in 2020. That's all for me. I will pass to Leah.
Thank you, Yana. So I'll proceed with the asset management ratio. So asset management ratios are essential for determining how successfully and efficiently a firm manage its assets to generate revenue. So now let's see the inventory turnover for both companies. Before that, let me explain what is inventory turnover. Inventory turnover is a financial measure that measures how many times a company's inventory is sold and replaced in a certain time period. So as we can see from the slides, it shows that the inventory turnover for Kind Holdings Berhad in the year of 2019 is 3.46 and has been increased to 4.43 in 2020. While for the Panasonic Manufacturing Malaysia Berhad, the inventory turnover for the year of 2019 has been 4.89 and has been decreased to 4.20. As we know that the higher the inventory turnover, the better, because high inventory turnover often indicates that a firm is selling things fast and that its products are in high demand. So from the calculation, we can conclude that Kind Holdings Berhad's inventory turnover performance is better than Panasonic Manufacturing Malaysia Berhad. Okay, so now let's proceed to the total asset turnover. Okay, so what is total asset turnover? It helps investors to determine how well organizations use their assets to generate income. Investors use the asset turnover ratio to compare enterprises in the same industry or group. So let's see the performance of total asset turnover for both companies. So from the slides, we can see that the total asset turnover ratio of Kind Holdings Berhad in the year of 2019 is 1.54 and it has been increased to 1.75 in the year of 2020. While for the Panasonic Manufacturing Malaysia Berhad, the total asset turnover ratio in the year of 2019 is 1.54 and it has been decreased to 1.45. So as we know, the higher the asset turnover ratio, the better. A higher score shows that you are making good use of your resources. So from that, we can conclude that Kind Holdings Berhad total asset turnover is better than the Panasonic Manufacturing Malaysia Berhad. Okay, now let's jump to the next one, which is the average collection period. Next slide. Okay, so the average collection period ratios measures the average number of days it takes customers to pay their bills and represents the success of companies' account receivable practices. So from the slides, we can see that the average collection period ratio for the Kind Holding Berhad in the year of 2019 is 105 days and it has been decreased to 97 days in the year of 2020. While for the Panasonic Manufacturing Malaysia Berhad, the average collection period ratio in the year of 2019 is 34 days and it has been decreased to 25 days in the year of 2020. So it's a positive thing if the average is low because it means that the company gathers accounts rather rapidly. If the number is large, the company may be experiencing difficulty collecting their accounts. So we can conclude from the calculation that the performance of Panasonic Manufacturing Malaysia Berhad is better because they only took 25 days for their average collection period. So last part for the asset management ratio, which is the receivable turnover. A receivable turnover ratio is an accounting term that indicates how successfully a company collects its accounts receivable. So from the slides, we can see that, that the receivable turnover ratio for Kind Holding Berhad in the year of 2019 is 3.45 and it has been increased to 3.47 in the year of 2020. While for the Panasonic Manufacturing Malaysia Berhad, the receivable turnover ratio in the year of 2019 is 10.72 and it has been increased to 14.04 in the year of 2020. The higher the receivable turnover ratio, the better, because it indicates that the clients pay their bills on time and that the organization collects the debts efficiently. So from the calculation itself, we can conclude that the Panasonic Manufacturing Malaysia Berhad is better than the Kind Holdings Berhad because its receivable turnover is 14.04 in the year of 2020. So I'll pass it to you now for the next one.
Okay, thank you, Liao. So for the gross profit margin, profit margin also known as net profit margin, and then the ratio measure net income per ringgit of sales and is calculated by dividing gross profit by sales. In 2019, the profit margin of Kind Holding Berhad was 33.7% and increased to 34% in 2020, meanwhile for profit margin of Panasonic was 80.5% to 90% in 2019 and 2020. And then the operating profit margin. Next slide. Operating profit margin is a ratio that measures operating profit or EBIT per dollar of sales. It is calculated by dividing operating profit by sales. And then the ratio serves as an overall measure of operating effectiveness. In 2019, the operating profit margin of Kind Holding Berhad was 51% and increased to 54% in 2020. Meanwhile, for Panasonic was 88% in 2019 and increased to 89% in 2020. So next, the profit margin. Net profit margin is the percentage of revenue left after all expenses has been deducted from the sales. So in 2019, net profit margin of Kind Holding Berhad was 34% and increased to 36% in 2020. Meanwhile, for Panasonic was 72% in 2019 and remained the same percent in 2020. And then next, return on the total assets. Return on assets is profitability ratio that measure the net income product by total assets in a company during a period by comparing net income to the average total assets. So Kind Holding Berhad was 0.83% in 2019 and increased to 7.48% in 2020. Meanwhile, the Panasonic was 10.5% and increased to 12% in 2019 and 2020. So return on equity. Return on equity is a ratio of net income to common stock equity, and it measures the rate of return on common stockholders' investment. So the return on equity for Kind Holding Berhad was 62% in 2019 and increased to 79% in 2020. Meanwhile, the for Panasonic was 97% in 2019 and decreased to 93% in 2020. That's all from me.
The leverage ratio is the percentage of a bank's debts to its equity or capital. So now let's see the performance for debt ratio for both companies. Before that, what is debt ratio? A debt ratio is a financial ratio that determines how much debt a company has. So from the slides, we can see that the debt ratio for Kind Holdings Berhad in the year of 2019 is 11.61 and it has been decreased to 8.23 in the year of 2020. While for the Panasonic Manufacturing Malaysia Berhad, the debt ratio in the year of 2019 is 17.12 and it has been decreased to 16.40 in the year of 2020. So the lower the debt ratio, the better. So from that, we can conclude that Kind Holdings Berhad debt ratio performance is better than the Panasonic Manufacturing Berhad, since the debt ratio for Kind Holdings Berhad in the year of 2020 is only 8.23%. Last but not least from me, the times interest earned. The times interest earned ratio illustrates how many times a company's pre-tax earnings can cover its interest expenditures. From the slides, we can see that the times interest earn ratio for Kind Holdings Berhad in the year of 2019 is 0.78 and it has been increased to 10.42 in the year of 2020. While for the Panasonic Manufacturing Malaysia Berhad, the times interest earn ratio in the year of 2019 is 5.14 and it has been increased to 5.83 in the year of 2020. So the higher the times interest earn ratio, the better, because it can be considered as an acceptable risk. So from the calculation itself, we can conclude that the times interest earn ratio for Kind Holdings Berhad is better than the Panasonic Manufacturing Malaysia Berhad. So I think that's all from me. I'll pass it to the next presenter, El Haris. Thank you.
Thank you, Leah. So this is the statement of the financial position of Panasonic. This is the statement profit and loss of Panasonic. And this is the final position of the Kings. And the statement of profit and loss of Kin. All of these statements we gather from the Bursa Malaysia itself. So, as the conclusion, after calculating, analyzing, and interpreting the various financial reports of the company, we have come to conclusion in the term of liquidity. For example, the state of the company of Panasonic is better than Kin because the company has more positive value, which means that the company has more financial resource to remain solvent in the short term. Though analysis of financial ratio in long-term solvency, we can see the company with less finance by debt is because a smaller value of this coefficient are indicate that the company are less financed by debt. For example, Kin with the lower rate of debt ratio in 2020. That's all for us. Thank you so much.